The Australian economy grows faster than expected and there's plenty of pressure on prices. Lithium stocks, which until the past few days have been the absolute darling of investors, tumble on fears of big falls in the price of the commodity, and the new federal ministry is sworn in with a record number of women. It's Thursday, the 2nd of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's Thursday.
And you know what that means, Sean? It is Safe Word Day every Thursday. Safe Word by Fear and Greed, our lighter look at the world of business and really kind of focusing this episode on kind of the office and the future of work, really, wasn't it?
I think so. Do you think we promote Safe Word enough?
No. I mean, we really only promote it like what?
I think I'm sick of it. And, you know, you and I are stars in the show, so how can we be sick of it? I hope the listeners aren't, though.
No. Well, the old principle, remember, is that only when you are starting to get sick of it are people actually starting to hear it for the first time.
Oh, excellent.
That we just have to keep on repeating it. And so I will say it one more time, Safe Word by Fear and Greed. You have to search for it. It is a standalone podcast. Just look for Safe Word by Fear and Greed wherever you listen to podcasts. It really is a pretty good episode. This one, I probably should say that because we are in it. But yeah, we talk about kind of bosses monitoring staff when they're working remotely. We talk about what it would take to lure you back into the office. And we also talk about how much credit I can personally take for our recent download success. And I think it's about 100%.
Yeah, I think that's what comes through in Safe Word is that you do believe that 100% is you. And well done. Well done.
Thank you, Sean. That means a lot. Now, immediately after the show today, stay listening for your chat today with Felicity Emmett from ANZ about the economic growth figures, which are also obviously the main story this morning because the Australian economy expanded at a faster than expected 0.8% clip during the March quarter, taking the rate for the 12 months to March to 3.3%. It looks like the Aussie economy is doing pretty well.
Yes, that's a fair assessment. A little caveat to that. The full year figure, that 3.3%, was down from the previous quarter thanks to the end of the Delta lockdown bounce. But we can just ignore that for the time being. All in all, the economy is looking okay. Not that Federal Treasurer Jim Chalmers was saying that yesterday. He said the figures are a snapshot of really serious constraints faced by the Australian economy. He warned that the cost of living pressures and energy price hikes are set to continue for some time. He blamed the previous government for the result. Mr. Chalmers also said that the government's submission to the Fair Work Commission in the next fortnight would ask for a 5.1% rise for minimum wage earners. Given it was the first time Mr. Chalmers fronted a national accounts release from the Bureau of Statistics, he was very downbeat.
Yeah, you'd expect it to be a fairly kind of political event considering it is the first set of data since the new government's been elected. But putting politics to one side for a minute, what did the data show?
Things are pretty good. I mean, the great thing about the national accounts data is it shows how different parts of the economy are going. Now, households are feeling pretty good with spending up 1.5%. There's a lot more spending on transport, on recreation, on culture. All those things that people are getting out and about again. It's great. Household spending is the biggest part of the economy. It's more than 50%. It tends to be pretty stable, but obviously if that's not doing well, the economy's not doing well. Residential construction was a bit of a different story. It fell during the quarter. Remember, there was a big pull forward last year thanks to government subsidies in that sector. That's pretty much over. Business investment jumped sharply. It's not as big a part of the economy, but it tends to move around a fair bit. So when businesses are investing, the economy normally is outperforming. And then there's government spending. All the support packages for flood victims in southeast Queensland and northern New South Wales made a decent contribution to growth. That's a one-off though. There's a couple of other measures that contribute to total growth. Inventories, such as companies filling up their warehouses, made a contribution, but net exports, that's exports minus imports, detracted from growth, and that's mostly because we're out there buying products from overseas. Finally, the measures of inflation and wages growth within the national accounts, really, really critical. They were very positive. They really do suggest there's plenty of price pressures coming through.
What is the main risk to the economy? Is it inflation?
Yes, the risk is that inflation starts curbing spending. You know, when you pay $100 for a tank of fuel or your electricity bill's 20% higher, or Michael, you're paying $2 for an avocado rather than $1.20, then you do start to slow your spending. And inflation also leads to higher interest rates, of course, and that significantly reduces disposable income. Undoubtedly, inflation is the big risk.
There's been plenty of talk, though, about people having savings and quite a bit of money stashed away.
Yeah, that's true. And the household savings rate is still pretty high at 11.4%. That's down from a bit above 13% during the December quarter. AMP calculates there's still about $250 billion in savings that could be used if needed. That's a pretty decent buffer. So in a sense, that money is there as an insurance. It's there for a rainy day.
All right, one last one before we move away from all of this. What does it mean for interest rates?
Well, it isn't discouraging of further rate hikes. In fact, it adds weight to the argument that the Reserve Bank will lift interest rates when it meets next week. Of course, it did it last month, and I think most economists expect them to do it again next week.
Okay. How did local markets perform yesterday?
Well, the S&P ASX 200 closed up 0.3% to 7,234 points. The telco sector was the best performing, followed by financials and industrials. Utilities was the worst performing sector. Fortescue Metals was the best of the top 200, up more than 3%. BHP and Commonwealth Bank were both around 2.3% higher. Transurban, Woolworths, Coles, they all did well. Gold and Newcrest Mining fell 2.7%, while James Hardie Industries slide continues with the stock falling another 3.6% yesterday. There were some massive falls among the lithium stocks. Remember a couple of days ago, we were talking about the battery metals companies being the best performers over the past year, and that's true. Well, at least it was 24 hours ago. A few investment analysts, including from Credit Suisse and Goldman Sachs, think those lithium groups might now underperform a bit. And that's because they forecast the price of lithium to fall. Goldman reckons lithium prices will go from about $54,000 a tonne today to closer to $16,000 a tonne next year. That's a massive drop. That hasn't happened yet, but just the fact that these analysts think it might happen sent the lithium stocks tumbling yesterday. Pilbara Minerals, Core Lithium and Liontown Resources all fell by about 20%. Alcon was off 14%. Lake Resources was down 13%. An incredible one-day sell-off for the lithium sector.
Yeah, it sure was. All right, we'll be back in a moment with the rest of the day's business news. Sean, it was a big day for the new Labor government with the ministry being sworn in, which includes a record number of women and a relatively diverse team in terms of ethnicity.
Yes, the cabinet has 10 women out of 23 positions. There's also another 3 women in the outer ministry. The new parliament overall has 38% women representatives, which is a long way in front of any other parliament this country's had. Now, some of the winners within the ALP include Claire O'Neill, who's been promoted to cabinet and will take on Home Affairs. That was the job earmarked for Christina Keneally, but of course she didn't win her seat. Deputy Prime Minister Richard Marles will take on Defence. Jason Clare's been given Education. Linda Burney will become the first Indigenous woman to hold the Indigenous Australians portfolio. Of course, Penny Wong's in Foreign Affairs, Jim Chalmers in Treasury, Katie Gallagher is Finance Minister. They were all sworn in last week, but a much more diverse cabinet and a much more diverse parliament, better representation, not perfect by any means, but a better representation of Australia.
Now, Sean, Origin Energy, which is, of course, the other major coal-fired power station owner and energy retailer, hasn't been getting the headlines that AGL has had in recent months, but yesterday, it outlined problems of its own, sending its share price down 14%.
Yes, Origin Energy cut its earnings forecast for the financial year by 25% and said it couldn't predict what would happen next year. That's enough to scare any investor. Origin is having problems with its supply of coal to the Eraring Station, the country's largest coal-fired power plant. Its main supplier, Centennial Coal, is struggling with its own production problems. This has gotten worse in recent weeks, and Origin has had to pay higher prices to find alternate coal supplies. Now, the announcement came after a cap was imposed on wholesale gas prices in Sydney, Melbourne and Brisbane in recent days. That happened after prices jumped to 80 times normal levels, thanks to the cold snap down the east coast at the moment. The Australian energy market operator intervened and set a cap of $40 a gigajoule, which is still 4 times normal levels, but below the $800 a gigajoule being charged on Tuesday.
That is extraordinary. Yeah. They are incredible prices.
Amazing moves in that market at the moment.
Yeah, sure is. Now, Sean, staff shortages are hitting the hospitality sector hard, with reports that trading is down by around 20% because publicans just can't find people to work.
Trading at Justin Hem's hospitality empire is down 20% because his outlets are short about 1,000 staff. Incredible. While veteran publican Arthur Laundy said the situation hasn't been this bad in his 60 years, according to a report in The Australian. Between them, the two own about 220 pubs and outlets. It's not just bar staff. Mr. Hem's Maryvale operations are short chefs, line-level cooks, sommeliers and professional waiters. In Mr. Laundy's case, he's just spent $43,000 with an employment agency to bring 9 chefs from Nepal and the Pacific Islands to staff his businesses. A major, major challenge for business at the moment.
Yeah, sure is. Now, lawyers assisting the New South Wales inquiry into Star Entertainment claim the casino giant broke the law every time it swiped China UnionPay cards in its hotel lobby and then made the funds available to patrons before the payments were cleared. That could amount to about 2,000 contraventions of the Casino Control Act.
Yes, the claims were made on the second day of closing submission to the inquiry by counsel assisting the inquiry, Naomi Sharp QC. She said the scheme was a sham involving sham documentation. She's already recommended the inquiry chair, Adam Bell, SC, finds that the company is unsuitable to hold a licence. Today is the final day of summing up. I'm really going to miss this inquiry, Michael.
Oh, me too. Geez, we've had some good stories come out of it.
Yeah, it sure has. And then just every day, in fact, you don't tell all the stories because there's so many of them. If you've got a week or so, just go and read the transcripts. It's quite amazing.
It is pretty incredible. Now, Sean, there's a decent spat going on in the telco sector with TPG and Telstra at loggerheads, which is a great word, isn't it? Loggerheads, with Optus over a network sharing deal.
Yes. Now, first, the background. TPG and Telstra have done a deal whereby TPG gets usage of about 3,700 of Telstra's towers. They've got about 11,000 towers nationwide. TPG gets usage of 3,700 of them. In return, Telstra gets access to TPG's low-band spectrum that can be used for 3G, 4G and 5G. There's also an amount of about $1.7 billion which TPG will pay over 10 years. Put all that together, basically it improves TPG's mobile coverage, particularly in regional Australia, and it improves Telstra's capacity. But Optus, which is a fierce competitor in the space, said the deal will leave regional Australia worse off and risks creating a monopoly in some geographies. This is getting very nasty, this one. The ACCC, the competition regulator, will decide on whether the deal goes ahead.
Big day today, Sean. The ASX has a new top 10 company with Woodside Energy, which is, of course, the merger of BHP's petroleum business and Woodside Petroleum, hitting the bourse today.
That's right, a new chapter for the business. It will be a top 10 global independent energy group and the largest energy company on the ASX. Undoubtedly, Michael will now come under intense pressure to continue with the shift away from fossil fuels. It has avoided much of that debate thus far as this merger has gone ahead, but Meg O'Neill, the boss, will be under a lot of pressure in that area.
Sean, you mentioned earlier the floods in the context of the government payments that went to the people who suffered through the floods earlier this year. Now, the Insurance Council of Australia says the bill for the flooding events in Queensland and New South Wales has reached $4.3 billion.
Yes, the East Coast floods are now the 4th most costly disaster in Australian history. Now, Michael, do you know what the other 3 are?
I could have a guess at one of them. I would say Cyclone Tracy in 1974, yes. And that's the only one I can guess.
Yes, that's the second one. These are all in 2017 dollar terms, so they've all been adjusted for inflation. So you're right. Cyclone Tracy in 1974 in Darwin was the second most. The most expensive was the 1999 hailstorm in eastern Sydney, in the eastern suburbs of Sydney. That was the most expensive. Yeah, number 3 was Cyclone Dina in southeast Queensland in 1967. To be honest, before my time, so I had never heard of Cyclone Dina. But there you go. That was the 3rd most expensive. And now number 4 are the Queensland and New South Wales floods this year.
I'm actually quite surprised there are no bushfires on that list.
Yes, I think about bushfires. You don't get as much damage to property, but not to buildings, as you do in floods.
No, that's probably a good point. All right. Okay, very interesting story, that one, Sean. A couple of smaller ones. Endota, the spa and wellness group, has bought a business in New Zealand.
I did this one especially for you. I mean, Endota's purchased the New Zealand's largest day spa group, Form Spa. Are you a spa user, Michael?
This feels like a bit of a stitch up here, Sean.
Yeah, it does.
I'm not a huge spa user. I'm guessing by your soft-looking complexion that you are.
That's the worst thing. I should be given my complexion, but no, I'm not.
That's just genetics.
I just don't get spas. Just don't understand them.
No.
Anyway.
No, look, it feels like we're both trying to cover up the fact that we do attend spas together, but I can assure you we don't. And finally, Sean, engineering group Worley says it will benefit from increased investment in oil and gas as Europe weans itself off Russian energy.
Yes, boss Chris Ashton said it was a significant shift for the company because there'll be significant investment in conventional forms of energy, particularly gas, in coming years. And that, of course, is great for Worley, which does a lot of work in that area.
Now, moving on to overseas news, European inflation has hit a record high of 8.1% in May.
Yes, it reflects surging energy and food costs thanks in part to the war in Ukraine. The previous record for annual inflation for the 19 countries that use the euro currency was 7.4%. That was set the month before in April. Unlike most other major economies, interest rates haven't started rising in Europe, but they're now very likely to do so.
Sean, the war in Ukraine continues, and now US President Joe Biden will give Kyiv advanced rocket systems and other US weaponry.
The war's now in its fourth month, and Mr. Biden said the hardware will allow Ukraine to strike key targets more precisely. Global leaders have been calling on the US to provide more weaponry. The war itself has changed somewhat, with Russia focusing on the east of the country rather than trying to seize control of all of it. Russian troops have reportedly made steady progress and control most of the Luhansk region.
Sean, I know I regularly accuse you of self-interest in the choice of stories, and I know that you're a mad keen golfer. So I'm assuming that a bit of self-interest came into this. But then again, it is an interesting story. Golf is a very kind of traditional sport. It is a very traditional world, but there is a revolution going on.
There is. And Greg Norman, the greatest golfer out of Australia, is the CEO of this revolution. In fact, he's the CEO of an alternate tour known as the LIV Golf Invitational Series. It's backed by Saudi Arabia. It's worth plenty of money, and it's pretty much taking on the US Professional Golfers Association Tour, the PGA Tour, the European and the Australasian tours as well. Now, Greg Norman hasn't done himself any favours. He at one point seemingly excused Saudi's human rights abuses, including the killing of a journalist. The tour itself has struggled to find players. Anyway, the first event is on next week, and Norman has managed to gather 42 players. There's supposed to be 48 in total. It includes some really big names. Former world number one Dustin Johnson, he's a huge name. Sergio Garcia is another one. Louis Oosthuizen, Lee Westwood, all of those guys have won major tournaments, so they are serious players. There are 4 Australians, Matt Jones and Wade Orsby. Both of them play on the PGA circuit, though are probably fringe players on that circuit. There are also 2 younger players. Anyway, the revolution in golf starts next week. The first event, Michael, is worth $25 million.
That is incredible. And look, I'm just going to squeeze in another very quick plug for Safe Word by Fear and Greed. If you go back to one of our older episodes of Safe Word, there is a fantastic story, Sean, that you tell about the time that you interviewed Greg Norman and things just didn't quite go according to plan. So, look, I'm not going to say any more, but just make sure you search for Safe Word by Fear and Greed and have a listen back through the back catalogue. You will not regret it. Sean, up next is the Fear and Greed Daily Interview, and we mentioned earlier that you're speaking to Felicity Emmett, Senior Economist at ANZ.
Yes, we get into the detail of the economic growth figures, what they mean, and also what we're looking at over the rest of this year and sort of how the economy's travelling.
Yeah, it's a good chat. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 2nd of June, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.